still
the one to beat. Still got to beat Nigerian stocks.
Happy to invest in the economy.
Really understand the difference between band A and B and C and D and all that stuff.
Are you interested in the heartbeat of Nigeria's economy? Join us every Monday morning on Classic 97.3 FM from 8 to 8:30 a.m. on Follow the Money with Ugodre as he delves into the dynamic world of finance, offering insights, analysis, and expert commentary on the latest trends shaping the Nigerian economy, or catch up on your favorite podcast platform. Follow the Money with Ugodre is brought to you by Nairametrics, creating wealth through information.
Good morning, Lagos. Good morning, everyone. Wherever it is you are listening from. This is Ugodre. This is Follow the Money, brought to you by Nairametrics. Oh my God, I've not been on radio in like 3 weeks. Oh, so good to be back. Refreshing. What has changed since I left Lagos? What's changed? There's still traffic everywhere, and Lagos is still the hustling, bustling city that we've always known. Anyway, it's been a lot going on in the market and stock market, that is. Remember, this is a show about the stock market, show that you can always stream on any of your podcast platforms, whether it's Spotify or Apple Podcasts, or even, I think they call it YouTube Podcast these days, so you can always stream as well. All right, so been a very busy month so far in June for markets. So if you're an investor in the stock market, I wonder what your portfolio is looking like right now. It's been kind of topsy-turvy for the market so far. It's been a lot of frenzy of activities going on, by the way. We're seeing a slew of public offers. Looks like the banks are straight out of blocks now to raise capital. There's also a lot going on in the non-banking sector, especially consumer goods. We all heard about the gist 2 weeks ago that Toleram was going to acquire Diageo's shares or stake in Guinness. So that also caught the market by storm. And of course, we also hear Nigerian Breweries is planning something as well as part of their own efforts to raise capital. Lots and lots of stuff going on within the market. You know why that's happening? A lot of companies took a lot of beating last year because of some of the FX moves that the government put in place, like the FX unification, which, triggered the depreciation that we saw, and so that really decimated balance sheets of a lot of companies. So companies are basically trying to restructure and recapitalize their balance sheet and re-strengthen it. And for those who can't stand the heat, they have to exit and leave in the country in droves because they can't just stand the heat. And those that can stand the heat are the ones that are remaining. That's how this thing is playing out apparently. And of course, for the banking sector, you have the central bank giving banks essentially what you call, look, it's time for you to raise capital. We don't want you to, stay by the sidelines. We want you to drive the 1 trillion naira economy as it is. Anyway, we're going to be talking about, banks today. One particular bank that is first out of the block to raise capital, and that is Fidelity Bank. So I'm going to give you my views on whether this is a bull or whether this is a bear. A bull essentially is that this is probably something that I like. Maybe something that I might buy, right? And then a bear is not something that I might want to buy. So you might want to stay tuned to that. And of course, on the block as well was First Bank. We had big gist during the week. They have a new majority shareholder. Do we call it new, or it's just coming back as majority shareholder? Okay, new majority shareholder. That made the news as well last week. And of course, I'm going to give you stocks on my radar. I have a number of stocks on my radar for the month. You don't want to miss that for those who maybe are looking at what they want to put in their portfolio over the next few days and weeks. Then you just want to stay tuned and listen to the stocks in my portfolio. These stocks are dividend-paying stocks, and these are stocks that if you buy at the right price, then you might be getting dividend. If you're someone who's looking out for dividend in the next few months, maybe you're looking for dividend that you can use to pay school fees. So you want to create just investor money and then get your dividend and then you can use to pay school fees in September or for your vacation or whatever. I'm going to give you some stocks on my radar. All right, so we dive right into into this. I'm not doing any market recap today. I'm just going right straight into the gist. No market recap. So Fidelity Bank, it's a tier 2 bank, like most of you know already, and they are expected to raise north of 300 billion naira as part of their own capital. The central bank says if you want to be want to continue to have your banking license, especially in the international license category, then you've got to be able to have 500 billion or thereabout in capital. And that's without share capital, without retained earnings, as you very well know. And so Fidelity Bank is one of those banks that is in that bucket where they have to raise 500 billion. I'm sure you're asking me, how come they are in that bucket? Because you do have, this is the same bucket where you have banks where you have the tier 1 banks, essentially. Tier 1 banks are the ones that tend to be in the bucket where you have to raise 500 billion naira. But Fidelity Bank is in that bucket because they have an international banking license, and so that essentially puts them as one of those banks that must raise as much as 500 billion. But the entire share capital must be up to 500 billion if they want to be in that bucket, and so that's why they are first out of the blocks to raise capital. And from the information that we got, their right issue is currently out. So there's a hybrid, which is not something we've seen in recent times. So they are doing a hybrid of a right issue and an initial public offer. Pretty strange, because I always thought Fidelity Bank had a public offer before, or they've done one before, but this is the first time. So even during the back in the days of banking consolidation, it wasn't really an offer. They got this big by, of course, organic growth and mergers in the last few years. I can't really recall which bank they merged with then, but this is the first time that Fidelity Bank is raising capital from the public. So that is why it is an initial public offer. And in this initial public offer, they want to raise, in the combination of the initial public offer and, of course, the right issue, they're looking to raise, how much is it again? Over about 127 or so billion naira is what they're willing to raise. And so for the right issue, of course, is for the existing shareholders. So the existing shareholders of the bank is expected to, buy 3.2 billion ordinary shares at 9 naira per share, 9 naira 25 kobo per share. So they kind of did it this way. If you own 10 Fidelity Bank shares, then you have a right to 1 share. So it's 1 new share for every 10 shares that you own. So if you're an existing shareholder of that bank, then you have the right to buy 1 extra share for every 10 that you own. But if you do not pick up that right, this is how right issues work. If you don't pick up your right, you basically forfeit it. Somebody else takes that right away from you and buys it, right? So the thing with right issues is that you can really get diluted easily if you don't pick up your rights. And so this is pretty much interesting for Fidelity Bank existing shareholders. So they are buying at 9 naira 25 kobo per share, and currently the shares, the company's share price, at least as of Friday, if I'm not mistaken, was about 9 naira 90 kobo, or there about 9.9 naira. So you're probably buying it at a bit of a discount from the market price. Now, for those who are IPOing, for those who are just buying for the first time, that is initial public offer, they are going to be buying at 9 naira 75 kobo per share. So slightly higher than existing shareholders. Kind of makes some sense, because existing shareholders are buying at a discount because, it's their company, right? And then for you who are just about to come in, you're going to buy slightly at a slight premium from the existing share. So that's why it's 9 naira 75 kobo per share. Again, still slightly lower than the existing market price. Well, you know how market prices, they can always go up and go down. It can even be much lower by the end of today for what we know. But that essentially is what they're trying to do. So 127 billion is what these guys want to raise between now and the next few weeks. And that would essentially put them halfway into achieving their plans of meeting the central bank's, stipulated 500 billion share capital. And these guys have between now, I think the central bank said it was 2 years. So looks like they're straight out of the blocks. And it kind of makes sense that Fidelity Bank is out before most of the other banks. So, it's going to be huge competition. And we've been saying it here at Nairametrics that banks are likely to raise over 4 trillion. So whoever is able to come out first and raise that money, put that in the bank, that is probably the first that is going to be able to complete this thing on time. Not that easy to raise that kind of money. I'm wondering whether this economy has that much capital to give out to banks alone. In fact, by the time you add the FMCGs that are likely to recapitalize, we think that over 6 trillion is likely going to be raised in by the way of equity or mergers and acquisition of deals this year and between the next 18 months. That's what we think at Nairametrics. Back to Fidelity Bank. So why should you be buying this share? This is a bull or bear. I mean, I've been looking at this bank for a bit, and we did some good story on it today on the site. Bit of a balanced, objective story, and I mean, I this is not a PR, by the way. So in case you think it's a PR, this is pure my view, my analysis. Of course, you can always contact your own financial advisor as you go on. But this is what we think. It's been one of the better performing tier 2 banks over the years. We've seen its profitability grown. Over the years, hasn't been that easy competing with the mega banks or the tier 1 banks as well. But they sort of like have held their own over the years. And from the numbers that I've seen or that we've seen, I mean, we've seen their profits go from about 28.4 billion in 2019 to 99 billion in 2023. The thing is that I don't really like to mention 2023, because 2023 was almost like a one-off. A lot of banks made money because of the FX windfall. So if you even discount that to 2022, they've gone from like 28.4 billion in 2019 to 46.7 billion in 2022. So kind of double or almost double over the last 4 years. And so if you look at 2023, and even if you discount that by half, you think that profit-wise, they've kind of doubled. Now, my favorite, you all know that I love earnings per share, because earnings per share sort of like basically just, averages everything out for you. And every earnings per share wise, they've gone from 98 kobo in 2019 to 3 naira. And if you look at 2022, 3 naira in 2023, but if you look at 2022, is 1 naira 61 kobo. So again, almost about 60 or so percent up over the last 4 years. And if you look at 5 years, almost more than doubled in terms of earnings per share. So they got to keep that earnings per share going. In terms of return on equity as well, average over the last 5 years, what we have is about 15%. And last year, returns on equity was somewhere around 28%, which, like I said, a lot of banks did pretty well in terms of return. That is also because of the FX revenue they did, but they did very well in terms of return on equity. So in that instance, looks like they are also not doing that badly. Now, in terms of valuation, and that's really where all this matters, because they're selling at 9 naira, and you're asking yourself, what 9 naira, less 9 naira 20 kobo or whatever, 9 naira for existing shareholders, 9 naira 25 kobo for IPO guys, 9 naira 75 kobo. Is this really a good price to buy for a banking stock? I've always had a problem with banking stocks. So banking stocks are obviously cheap. Like most banks are cheap. Banks trade at less than 3 times their earnings, which is just crazy. But there's always a ring to it. There's a reason why they trade that low. They trade that low, one, because they have a lot of liquidity. Their shares are just everywhere, so you can just always buy and sell them. And there's just not a lot of stocks on the exchange right now. So those liquid stocks are the ones that get beat up all the time. When there's a bearish market, they're the ones that tend to go down. When there's a bullish market, they're the ones that tend to go up faster. So a lot of people own those stocks, and so it's easy for them to get traded. And so very difficult for them to maintain stable prices. That's one problem that they have. Another challenge as well is dividend. So Nigerian stocks, like I always think, are more of a dividend stock. Like valuing Nigerian stocks is basically using dividend as your basis of valuation. That's what I think. Not EBITDA or any of the other ways that you can value shares. I prefer to value Nigerian stocks using dividend. So if you use those bases and you go back to Fidelity, it looks kind of cheap because it's trading at like 70 times is book value or its net assets, which means that it's basically trading, its market value is less than its balance sheet, like its book value, which is just crazy. Makes it sound like it's very cheap. Anyway, but one problem that I always had with the bank and with most bank is this dividend payout ratio. So for Fidelity, the dividend payout ratio hasn't really been that fantastic. Over the last 5 years, I think it's kind of averaged like 30%, which means that for every profit that they make, they only pay out 30% of it. And so that kind of has an effect on its dividend. So if you're somebody who's really out for dividend and they are paying out 30%, dividend payout ratio, you're asking yourself, 9 naira just is about 25% dividend ratio. 9 naira is just about that price. Because think about it, if that's what they pay and you want to earn, say, you think they should be able to pay 85 kobo, for example, per share, or let's say you're buying at 9 naira 75 kobo, then you expect that if you want to get 10% annually, then they should be able to pay 90 kobo dividend. So what did they pay the last time? Dividend last time was about 85 kobo. So kind of looks like the current price is about right, about where you think you might want to be. So and from what we read, they claim that they could increase their dividend payout ratio this time around, which is currently at between like I said, 25%, but they're saying that they could be playing around the range of 25 to 40%. Look, the CBN has already told you they don't care about your retained earnings, so there's no point keeping all that money. Pay out dividends. Banks pay out dividends. Like, you got to be able to do 60% dividend payout ratio. Most banks tend to be under 50%. So you got to do 60% dividend payout ratio. The CBN doesn't care about your retained earnings. So all those retained earnings you're keeping, who you keeping it for? Pay it out to your shareholders. So bulls or bear for Fidelity Bank? Of course, there's going to be more in-depth analysis on nairametrics.com. So if you go, there's going to see a lot more in-depth analysis on what we think about the stock. But on this show, I'm going to go bull. I'm going to go bull because if there's one bank that has been knocking on the door of tier 1, I think it's Fidelity Bank. Stanbic IBTC is also another bank that has been knocking on the door for tier 1. So I'm going to be looking out for their own fact behind the figures as well, because they're also likely going to raise capital. Knocking on the door. A few other banks that I'm going to mention, maybe in other shows, that are knocking on the door. But I think since this is the bank we're talking about now, I will go bull for it. Provided that they stick to a dividend policy that is aggressive. I mean, like I said, you can always buy this share and then sell it off anytime you want. Banking stocks are liquid. All right, guys, that's it for me on Fidelity Bank and their IPO and right issue. When we come back, we're going to talk about First Bank and what's popping in that space. Be right back soon.
You're listening to Follow the Money with Ugodre.
Welcome back. In case you're wondering what show you're listening to, this is Follow the Money, brought to you by Nairametrics, which is every Monday 8 to 8:30 on the station. Of course, you can always listen to playback versions of the show on any of your favorite podcast streaming platforms. And guess what? This is also going to be on YouTube pretty soon, so you can also watch me deliver this on YouTube. My name is Ugodre, by the way, and you're welcome to the show. All right. We did get a question as I was going on, and someone was asking, what do you think about Geregu shares? Remember what I talked about banking stocks being very liquid, and that's why they tend to go up and down and their share price is never sticky. It's because they're highly liquid. Now, the opposite of that is shares like Geregu shares. They're not that liquid, so you can't always find them out there to buy as much as you want. And so for that reason, and even if you want to find them to buy, there's always low bids compared to offers, or more bids compared to offers. Bids, of course, is the number of people who want to buy, and offers are those who want to sell. So for that reason, it's not a very liquid stock, and so the price can be quite sticky, which means the price hardly goes up or down. And if you look at the fact that this was a stock that got listed 2 years ago, it actually has gone from about, I think it was about 120 naira or so when it was listed, to over 1,000, to about 1,000 naira, if I'm not mistaken, per share currently. And it's been at that price range for a few weeks. So if you're able to grab that stock, I think that one of the benefits of what you get is a stock that is not very, very susceptible to share price fluctuations. And in terms of the company, I think the bottom line is good, fundamentally sound, one of the better performing power companies out there that is listed, and so has some kind of strong fundamentals as well. But whether that justifies the price is something else that we would have to we can always talk about in another version of the show or another segment of the show. All right, so we go right into First Bank. So big news last week. We did hear that billionaire investor, who incidentally is also the majority shareholder of Ugodre Group, Power, Femi Otedola, announced that he now has 9.41% stake in the bank, basically making him majority shareholder of that bank. And so he takes over from Barbican, I hope I got that right, Barbican Capital, which is the vehicle owned by former as well First Bank chairman Obao Tudeco. So Obao Tudeco officially is on 7.01%, as it is in the bank's annual report. So the last new stake, Barbican Capital is 8.67%, my bad, and Otella is now up to about 9.41%, so much higher at the moment. The way things are going could likely even be higher than that, because if you go back to how he started acquiring his shares, he tends to usually just drop these things, and then over like a week, and you start to hear that he's hit certain milestones. So I won't be surprised if at the end of the week we hear that he's above 10%. I really won't be surprised at all. But what does this mean for that bank, though? That's what I've been trying to wrap my head around. What does it mean for First Bank? First Bank has been one of those, very steady banks over the years. One of those dividend-paying banks. They pay dividends very well. The bank has had its own issues with, how it's run, or whether it's really as profitable as it should be. Is it really hitting its height in terms of potential? That has always been the issue, But whether it's a safe bank or it was a bank that is solid, we all know it's solid. I mean, everybody had a First Bank account at one point in time, but you kind of always feel like this is a bank that can do better, much better. And if you look at the numbers, it's kind of there. Like 5 years ago, 2019, First Bank was doing 73.6 billion in terms of profit, and in 2022, they were doing 136 billion. So pretty much, significant in terms of growth. And 2023, last year, which, like I said, was just one off year, they did 310 billion. And so pretty solid bank, as well. And in terms of dividend, that's where they kind of like not really been that impressive. Average dividend payout ratio is 13%. I just hate that. 13% dividend payout ratio. Gotta be higher than that. Last year, dividend was 40 kobo, which was 5% payout ratio. You can imagine. But again, pretty solid bank. And the fact that Otella is there, I think, kind of makes that stock a bit attractive now, if you know what I mean. Those who know what I mean, could make it a bit attractive. And so I'm looking at that stock, and looks like it's going to be on my radar pretty soon. And they are also going to have their own capital raise, just like other banks. So you might want to just wait for that, but let's just see how things pan out. So he's had majority shares, and that's it. Let's watch out and see what happens next. They have a new CEO, MD CEO. Looks like a new management is shaping up already. Maybe things are about to get different for First Bank, or they're about to sort of improve from where they've come before? Because the last CEO also did pretty well. They did, taking the bank from a bit of the doldrums it was before he came into where it is at the moment. So we're hoping that it's sky's the limit from now on and not back to where we were before Adetuto. All right, so I said I was going to also take you guys on stocks on my radar, and there's few stocks that I want. I'm likely going to put on my portfolio over the next few weeks. So I'm considering the stocks for my portfolio. The reason why I have these stocks here is because of their dividend potential. I like dividend, you know that. I like dividend a lot because dividend is return, right? So if I invest money in a stock and it's not paying me dividend, why the hell am I putting my money in there? Are you Amazon or are you Apple? Because some people tend to say, why do you have to pay dividend? You're not Apple, you're not Amazon, you're not Facebook, you're not any of these, global tech stocks that typically don't pay dividend, but investors understand it's a capital appreciation play. But in Nigeria, it is not a capital appreciation play. It is pure dividend. That's it. Always put that in your head when you're buying stocks. Yes, you can always have capital appreciation, but on the long run, it's a dividend play here. So if you're going to buy stock that doesn't have dividend, that don't pay dividend in Nigeria, you are just wasting your money. See, it's almost like a gamble. That's what I think. Anyway, so the first one on my list, I hope you have your pen and paper out. You want to watch out the stock. They tend to pay half year dividend, and when they pay dividend, it's usually in dollars because most of your earnings are in dollars, and so they report in dollars, and they tend to pay dividend in dollars. And so I like the stock. Currently not in my portfolio. I've not bought that stock in a while, but I'm closely looking at it, hoping that maybe the share price could fall a little bit lower for me to get in. But that stock is Seplat. So Seplat tends to pay dividend half yearly. This year, the share price is up 49% year to date, and it's trading at an all-year high at 3,000 naira, 450 cup, 3,450 naira. So a bit out of my reach, but I want to look at it. The only problem I have is that the dividend yield is pretty small, 4.2%. But if you think that it's being paid in dollars, then maybe not so much of a bad return if you're somebody who is looking out for some kind of dollar investment. For those who are looking for dollar investment, this might be one of it. And remember, it's half year dividend. And I think Seplat did pay a lot of dividend last year. They paid, I think, maybe 3 times or so dividend last year. It's just an incredible stock to own. So that's what I'm looking at. The next one is Presco. Presco is one of those agro stocks that have been doing pretty well. I've been very much impressed with the trajectory over the last. Could be paying dividend as well. And the share price up 86% year to date. They're currently trading again at a high of 359. I'm just hoping the stock is going to come down a little bit so that I can just put some in my portfolio. But we're projecting dividend yield of perhaps 10%, which is not bad if that is what it takes. So I have the stock on my radar. I'm hoping that maybe perhaps it could just fall a little bit, for an entry, but it's right up there in my radar for dividend. Presco. Next one is an insurance company. Not all the time you see insurance companies on my radar. No, not all the time. We can be very skeptical about insurance companies at Nairametrics. There's very few one of them at Nairametrics that we tend to like, and this is one of them. Custodian Investment. Like, it used to be called Custodian and Allied, but Custodian Investment these days, which means a conglomerate of several financial services businesses except banking. And so they also are likely to pay interim dividend from what we suspect. Last year, they paid interim dividend of 15 kobo and a final dividend of 65 kobo. So the share price is not as expensive as the other ones and hasn't done as well as the others. But we think that this could, this stock probably has a yield of between 8 to 10%. Quickly now, because there's no time on our hand, the next is Okomo Oil, just like Presco. I love the stock. I bought the stock I've held this stock for almost a decade now. I bought it, when it was like 35 naira per share back then. Currently, Okomo Oil pays a dividend at 14 naira per share. So you can imagine, what that means. I mean, the stock that you bought at 35 naira per share is paying dividend at 14 naira per share. Just incredible stock. has been profitable for the last 10 years or so, and with profit growth. We're looking at dividend yield of 7%. And the last two, Access Bank, last three on our radar. These ones always pay dividends every half year. In fact, they're all banks. So, for sake of time, I'm just going to call out their names. Fidelity Bank, GTCO, UBA, Stanbic, and Zenith Bank. They tend to pay dividends every half year. And because banking stocks are cheap, we're hoping that these banks are going to give us dividend yields of 10% at least. All right, guys, that is my show for this week. I hope that you got a lot of nuggets out there. Again, if you miss any part of the show, you can always listen to it on Spotify or any podcast platform. This has been brought to you by Nairametrics. My name is Ugodre, signing out. And until we do this again, do have a profitable week ahead. And don't forget to send me any message if you have any at Ugodre on any social media platform. Peace.